Let's talk Nvidia. Market's under some pressure this morning. Nvidia was higher but drifted downwards as we've gotten some additional selling since we started trading. I got Tom here in studio. We're going to talk some options on the tech companies, and Darin Tuttle joins us from Tuttle Ventures, Chief Investment Officer, to talk about some of the latest. Darin, yesterday Nvidia made an all-time high, really in a world of its own, and some fresh products out at CES. So is that what we tie to this move?
Yeah, Oliver. I mean, this stock is a beast of its own, right? The AI bulls have really made their mark here. There was the JP Morgan's healthcare conference that just recently came out. They have CES in Las Vegas later today. Made a big splash there. I heard that the line to talk to the presentation was just going out the door. I mean, there's just so many companies, right, that want to be able to get into this AI movement. And Nvidia is the bellwether here to be able to participate in that, right? Yesterday, they also announced that their GeForce RTX super desktop GPU, it's all about accelerating, right? And this is its own category. We're talking about, PCs, we're talking about the smartphone, and now we're talking about AI. So when you look at these big generational shifts, you can see that the market is actually having a hard time pricing this. There's longer term trends that, I think support some of the fundamentals here. One of those is just supply and demand, right? NVIDIA, historically, has been really great at being able to have their days of inventory outstanding come down, their days of sales and efficiencies are beating, all the industry averages. So to me, that's saying hey, they're able to push through their inventory. There is demand on the backside of this, and they're guiding higher than expectations quarter over quarter going forward, right? So for the second quarter here in this fiscal year, I think it's going to be tough to beat those year over year numbers coming in then. But most market participants understand that it's extremely hard valuing NVIDIA when you really just don't know how much demand for this AI software is out there.
This transition from the hardware build-up into the products, the services that are going to be driven by this stuff, where do you think we are in that process? Are we still very much in the picks and shovels mode right now, or this year should we start to expect a big breakthrough? I mean, there's some stuff out there, right? I love making my newsletter images now with the generative AI, and we've heard about some layoffs as AI is replacing workers, but it still seems like largely this has been kind of a hardware accumulation story.
Yeah, I'm going to be on the right side of history of this one. I'm going to be on the bullish side here with some tapered expectations, right? You mentioned before the call, all in on NVIDIA, probably not, right? But an allocation, to a growing trend, sure, makes a lot of sense. For me, the way that I categorize these is the difference between asset light and asset intensive business models. So NVIDIA's business model is very asset light. It's not like the traditional semiconductor companies in the past. They have a framework from which you're able to tap in to be able to leverage these AI tools at an accelerated rate relative to some of these more legacy players in the space. And then when you look at the CHIPS Act, that's another $39 billion coming on in the next 5 years, and you have China gaming, which is looking like that's coming back online with some of the regulatory changes that you've seen overseas there, and so NVIDIA's data center revenue is I think a category in and of itself, just because of the demand that you have on the long-term upside here. I think this is a long-term play going forward.
Now, when we think about how unique it is, I mean, there's these competitors like AMD that are unveiling stuff as well. Market-wise, and because I'm not the chip expert, the hardware expert, I don't want to demonetize what other businesses are doing, but the market, as we're talking about here, is put them in a class of their own. So do we view exposure to this trade as being like a broad chip trade that you want to have in your portfolio, or should literally NVIDIA just kind of be a big chunk, an abnormally large single stock chunk?
To be honest, I want to have the leaders lead, right? So Nvidia is the leader here. I want to be able to have that tailwind, but sure, absolutely, have a diversified basket into semiconductor exposure. I think, yeah, the competitive industry for this is, what do they call that before the segment? It's the AI arms race, so to speak, right? So this is intense focus. This is a very competitive industry. NVIDIA is clearly the leader right now based off of supply and demand dynamics and their ability for throughput on their inventory. Do they have peaking revenue? That's a big question. Can a competitor come up and replace them is, I think, the other one. But, I think this next quarter is going to look great. Second quarter may have some tapered expectations. This is a long-term play. I mean, look at that chart.
It's a beauty. The last point is on the valuation and what the market needs to kind of keep the stock afloat. Amazingly, the valuation's come down over the past year because of all the big earnings growth. What do you think then we look for as traders or investors to know around earnings if there's potential for disappointment or correction? Take Apple, for example. Valuation went way up. They have a misstep. Boom, stock gets hit. Fairly kind of easy to understand from a trader perspective, kind of the logic for why that would happen. But for Nvidia, I don't really know what would. Is it revenue growth that slows down? A miss or two? What do you think we should be on the lookout for that might slow down any of the trend?
I think if you just look at the headline price targets, right? Bank of America is kind of the leader out there at $700. We have a price target in NVIDIA at $600, which is a 15% upside from where it is right now. I like those gross margins at 69%. We expect those to continue. I would say one of the big things that could have potential downside, like I said, is that market positioning and also just revenue guidance, right? So the revenue guidance is $20 billion for the next quarter, but overall, I think the demand and the throughput for the inventory are going to be those key things that I'm going to be looking at under the hood, making sure that they're paying their suppliers, making sure that cash is flowing freely through the company.
Okay. Great stuff, Darin. Thanks for the thoughts. Much appreciated. Happy New Year. Tom, let's do some trading, sir. You've got two very different approaches for this.
Right.
One is bullish. The other one is also bullish, but slightly less bullish.
Yeah, definitely. Well, I guess we'll take a look at the bullish one.
Which one?
The bullish one, not the neutral, the bullish one, the more bullish one.
Still both kind of bullish.
Yeah, but I think when you look at this thing, how do you want to trade it, right? If you're bullish on this name, there's different ways that you can use the option market and leverage that. With a $520 stock, maybe you should be using options on this type of positioning just because it is so expensive. That way you can limit your risk on option strategies. So first one I looked at is where I can offset some of my costs on that strictly bullish sentiment trade here. So I went out to the February 16th monthly cycle, so about 38 days till expiration. They've got earnings on the 21st of February, so I'm avoiding that. But I'm taking advantage of if we see a rise in the shares into those earnings results while also avoiding that event risk with earnings, which could send the stock down. So going out to that February monthly cycle, I'm going to look at buying an unbalanced or broken wing butterfly here where I can offset some of my costs on it. So I'm going to buy one of the 520 strike calls. That's basically at the money. I'm going to sell two of the 550 strike calls. That's where you want it to go. And then buy one of the 555 strike calls. So in essence, I'm buying a $30 wide call vertical embedded in this, and then selling a $5 wide call vertical to offset some of the costs on it. Paying roughly about an $11 debit on that. That's going to be risk, $1,100 per spread on it, but you can see your break even, 531 to the upside on that one. It's not too far above those all-time highs that we just hit. That's about 2% above the current share price. So you don't need a massive move. You need to kind of grind higher over the next maybe 5-6 weeks here. And then the apex of profitability is at or near that short 550 strike. But even above 555, Oliver, it's going to be a double on this just due to the setup of this one. So offsetting some of the costs on that unbalanced call butterfly.
All right. So the 520 buy, sell two 550s.
Yep.
Then buy a 555.
Right.
So you got 3 different strikes you're dealing with here that give you that peak perfect outcome.
At or near 550, yep.
At or near 550.
But
right?
even
And then
above 555, it's going to be about
yeah,
a double.
you keep making money. Okay.
Yeah.
All right, nice. But if you get to that point, then you're basically taking the trade off, right?
You can, but it's not going to expand in price until you get really close to expiration. So you've got to take that into consideration.
Right.
Maybe if you buy 10 lots or 20 lots, maybe you take off a portion of it if it expands from $11 to $15 or $16 or $17.
Sure.
Maybe you start parsing down some of them.
Yeah, it's kind of a fun way to do it because when
Yeah.
you got the trend at your back for Nvidia, it's a fairly high probability trade.
Yeah.
And then if you happen to get the price right at the right time, if it goes in that direction, then you get a little bonus.
Yeah.
Basically to
A
your
little kicker.
to your trade. All right, little kicker, little boost to it. All right. What about if you rather like sell downside? Is that
Yeah.
what you're doing for the other trade?
Yeah, a little bit more conservative on this one. And you mentioned probabilities of success. This one's got a higher probability of success. It's still a bullish sentiment trade, but it's neutral to bullish, where I'm going to profit in 3 out of 4 different scenarios on this trade. Still using that same February monthly cycle, so 38 days to expiration. You're going to avoid that earnings event. I just looked at selling a downside or out of the money put vertical here, selling the 500 strike put, and then to make it risk defined in case we do get a sell-off. If the overall market goes down, don't believe that Nvidia won't go down also. It definitely has that possibility. So selling the 500 strike put, buying the 480 strike put, $20 wide short neutral to bullish put vertical, collecting roughly about a 550 credit on that. That's going to be your potential reward, $550. Your break even, just under $495 over the next 6 weeks. That's about 5% below the current share price. So there's that cushion that you're giving yourself, and that kind of offsets some of the probabilities here too. You've got about a 65% probability that Nvidia will be above that break even of about $495 to the downside into expiration over the next 38 days. So a little bit more cautious, but you profit if the stock goes up, stays where it is, or goes lower but remains above that 500 level.
Understood. All right. So 500 sell, buy the 480 Feb 16th.
Yeah.
Collect $550.
Yep.
550, and then let it ride.
Yeah.
And hey, we're back up today. So Nvidia back into positive territory. Thanks, Tom. Thanks, Darin Tuttle.